So good morning guys, how are you? Hope you're great. My name is Investor Paul. So I want to take you through how you'll be trading on your mobile phone. So just simple. I normally trade synthetic markets. This video will be a bit long, but I'll try make it short as possible. So I trade synthetic markets. They are on Derived broker. So these markets, the example, they include the volatility pairs. So we have these volatility pairs. I'm going to show you how you're going to trade those volatility pairs. So first of all, after you open a chart, go to your symbol, scales, enable the countdown to bar close, right? Enable your countdown to bar close. So after enabling your countdown to bar close, we're going to use an indicator together with some technical analysis, and then after the technical analysis, we're now going to get our entries. But first of all, let me teach you something before we go on. So I want to teach you something, guys. For example, we'll be trading something called reversals, right? We'll be trading something called reversals. So reversals means, in short, the market is maybe, for example, if the market was buying, then reversal means it will do what? We'll then expect that particular market to do what? To sell. And if it was selling, then of course we will do what? We'll expect the price to do what? We'll expect the price to give us buys. So that is all about reversal, and I'm going to teach you how we are going to trade reversal. So let's start. For example, if you want to trade something like buys, and so to trade buys, when you're talking about reversal, the market has to be doing what? The market has to be selling. So to be selling, for example, price has to be on downtrend, like for example creating a series of lower highs and lower lows. Price will be on downtrend, creating a series of lower highs and lower lows, like that. The price will be on a series of lower highs and lower lows, and then after creating a series of lower highs and lower lows, there will now be a reversal, and the reversal will build up from this particular point. So we'll be targeting on trading reversals. For example, trading buys, we'll be targeting to use these lower highs to find our entries. So for example, when there's this reversal, of course you'll start watching at this first lower high. Of course we'll expect a breakout for a good entry, or for a successful buy. Of course there'll be a breakout and then a retest, like that. The market has to retest all those levels that you're seeing there, those lower highs that were there previously. The market is going to retest those levels, and then from those levels is where now we'll do what? The market will give more buys. So what I'm trying to say is that when you want to trade reversal, for example buy reversal, you'll be watching your market from there using the lower highs, the previous lower highs that were there. For example, like this, the previous lower highs, like that. So in this video I'm going to teach you how we'll be trading buy reversals, and then in the next video I'll teach you how we can be trading, how we'll be trading the sells, to avoid making the video to be too long. So watch this video and try to understand how we go about. So for example, I've told you, if you want to trade the buys, you'll be using the lower highs as your key levels. You'll be using these lower highs as your key levels. Those lower highs are the ones that are responsible for giving us the key levels to the market. So here we go, we are taking the lower highs. I'm taking the lower highs, and the lower highs now will be the one we'll be using to find entries in the market. So let me include now the indicator, and then I'm going to show you how we are going to use the indicator to find buying entries. So first of all, we'll go to our 4 hours time frame, like that. So after going to a 4 hours time frame, but before you go to the 4 hours time frame, I hope you have that structure in mind. You can take a screenshot of it, or you can just put it down somewhere, and then it's going now to help you in our trading, or how we are going now to find entries in the market. So let's go to the 4 hours. We will start at the 4 hours time frame, and then now the indicator is called what? The indicator, the name is called just come and write standard. Just write standard, these standard error bands, like that. After you pick your standard error bands, come input some few settings. So the first settings, we're using a period of 21. We're using a period of 21, and then here we use what? Here you use standard 4, use 4, and then here you will use 1, like that. 24, and then 21, 4 and 1, like that. And then after you've done that, you'll have it in place, and then what you do is now get back your and then now we're going to look for buying entries. I've told you, if you want to buy, here we go. I've explained to you, if you want to buy, then you must do what? You must get the price when it's selling. I've told you, if you want to buy, then you have to do what? You have to get the price if it's selling. So like this, for you to buy, the price must be selling according to the reversal strategy. according to the reversal strategy. So one thing about let me first, maybe I'd forgotten something. Come here to the plot and then deactivate the orange line. So we want to look for what? We want to look for buying opportunities. So let's see, for example, these buys that happened here. These buys, how could we have got these buys in the market? How could we have got these buys in the market? So let's go and see how we could have got them. So I told you, if you want to trade buys, the market must be doing what? The price has to be selling. The price has to be selling. So you have to go back and then, but the good thing about the markets, they only sell or buy. So it means before this buy started, that this buy that we wanted, before it started, it means the market was doing what? The market was on sales. And then now let's try look for those sales. I told you, look for the lower highs. This is the structure that I gave you. Look for the lower highs or mark the lower highs out. And then now you're going to use those lower highs to find your entries. So okay, after now what do? Let's proceed to mark our lower highs. Where are our lower highs? We have so many lower highs, but we'll try to look at the latest lower highs that were there in that market. So we have one here. We can just start here. We have one here, but if the need will arise, we'll go in the past and look at others. So we have one there. We have another one here. We have so many low highs. Okay, there's another one too. There's another one also here down, because that is a lower high down there. This one is a lower high. Not to be specific, that candle that that sell candle that has a wick, that on top of it is a lower high. So and then after that we got loss of the lower highs, and then the price also started to do what? We saw the price starting to buy here. There were some small buys that happened here, but that is just but a retracement. So after the retracement, we continue marking our lower highs. So let's mark the lower high now. We also have another lower high there. So we're just marking several lower highs, and then after there, where do we have another lower high? We have another lower high up here. We have down here. We have another lower high down here. So I think this was the last lower high that was formed by the price before before it started going the opposite direction. So what we do, we'll start paying attention. We'll start paying attention to the last lower high that was formed by the market. So this is the last lower high. And then now, how are we going to cooperate it with the standard it's called the standard error bands, the standard error bands. So one thing about the standard error bands, it has to do what? It has to be, the lower band has to be facing up, and also the upper band will do what? Will have to start facing up. But most of the times the lower bands normally come first. The lower bands starts to do what? Start to form before the higher bands start to point up. But they, at the end, they have to be pointing they have to be pointing up, both of them. So what you do, the last thing you do is go to a 1 hour time frame. You can go to a 1 hour time frame. So I'm showing you how you narrow down and then you get clean entries. So after you've gone to your 1 hour time frame, you will just do what? Refer to the last low high that was there in the market. You refer to the last low high that was there. You can use your 1 hour time frame. You can use any of the time frames that you want, but I prefer using the 1 hour. So we said here was the lower high, right? We had the lower high here. We hit the lower high. So you see one thing, I told you what, you remember in the structure that I gave you, in the structure that I drew for you guys, I told you after the breakout, after a lower high is taken out, the price has to do what? The price has to do a retest. So I gave you an example. So we have this lower high here. You see the lower high was taken out, but you don't enter immediately. Enter after the retest. So after this retest, now you start doing what? You start looking for buying opportunities. So let's just go back to our example and then try to see what we were saying. So you see there was a breakout here, right? You see very well there was a breakout. Let me show you guys. This is for buys. There was a breakout here, and after the breakout, now we see what? We see our retest. The retest I've been telling you guys about. So the retest, this is the retest down here. We have the retest here. So after price retesting, now it is now what? It is valid for buys, because only here there was breakout without any retest, but now here we have the retest that we were expecting. So what do we do? Now the market or the price tells you that is valid for buy. So what you do is just mark any low high that was in front of it, like this low high here. So after you mark that low high, again now there will be what? After price takes that resistance, it means that is the resistance. So price takes out the resistance. You see here clearly, price goes ahead to take out the resistance. So after taking out the resistance, what happens? Price activates a lot of buys. There's a lot of buys that is activated. So your entry point is normally after that candle that did the retest on the resistance. So like that, after the retest, you place your stop loss below there, and then now you target a ratio of, at least I normally advise my student to target a ratio of 4 or something like that, 4 in a trade. So you see, like that one, it gave us a very clean buy. And you see at the end, the standard error bands, both of them, they were facing up. So it meant like we were very right in our prediction, and we were just supposed to go for the buys just the way the market was saying. So guys, I hope I have explained to you. I don't want to make this video to be very very long, but that is whatever I just wanted to tell you about. But I'll be doing more videos of this to make you guys understand. But in the meantime, watch this buy video, and then we'll now wait for the next. You'll comment on the video and tell me if you're ready for the selling example. But I've given you one example, but if you don't, maybe for example, understand, I'll still make more videos to make you guys understand. Otherwise, you guys have a good time. I have a Telegram channel. You can join my Telegram channel. The link is on my TikTok bio. This account, you can just go to my bio and then click. You will join my free community where I'll be teaching you all my strategies. I've already a pro at that. I've been doing that for quite some time. Today even I managed to share an entry to my students, and this was the entry that we were targeting to trade. This is volatility 50 index. We were just using the same concept that I gave you guys, the same concept to trade. And you see, for example, this trade is running in some very good profits. With me, I have the, you see, I have my channel there, which is called, I told you, like it's called the standard error bands. And you see, they are helping me also to do it with some few technical analysis. It's helping me to at least find some very nice entries in the market. You can see, like right now, this price is on sales and it's pushing down. But do not forget for what I've told you guys. So go and put in practice, and then we'll meet in the next video. Otherwise, you guys have a good time, and thank you for now.